I'm really excited to bring up an amazing panel to talk about the 50 states are in play, and so excited for our next panel.
Thank you all. Thanks. This is our state law panel, and I'm Susan Seaman. I'm a partner at Husch Blackwell. I'll let each panelist introduce themselves when we kind of do our opening lightning round question to get everyone's vocal cords warmed up. But, you know, I love the title of this panel, 50 States of Mine. A lot of attention is given to the federal level, particularly here in DC. But one of the, as many of us know, one of the unique aspects of the U.S. financial services market regulatory framework is state law. And so we have 50 states, 51 with DC, independent actors who have their own agendas, who have their own dynamics, in charge of their own regulatory framework within their state jurisdictional boundaries. And it does create challenges and complexities when you're operating a national program. Instead of doing the typical state law panel where we just like bemoan state law compliance, I really want to focus on, you know, let's have a productive conversation about how states can play a role in promoting financial innovation, particularly within our national framework. So with that, I would like each panelist to introduce themselves and do like one minute or 30 seconds, because we only have 35 minutes, of what do you view the state's role in financial innovation and promoting it?
Sure. I'm Ryan Naples. I'm the Director of Public Policy at DailyPay. And, you know, I think for the last 3 years, Earned Wage Access and DailyPay has been very pro-regulation, very proactively engaging with both legislators and regulators and governor's offices. And I think their role is really like as a partner to serve as like a thought partner to kind of work together to find the right balance for this emergent industry. It's not really even like emerging anymore. It's really like here because it exists in all 50 states. So I think it's been a positive experience, to be honest, and it's you know, we definitely like look forward to next session, next legislative session. So a lot of good things.
Well, good morning, everybody. I'm Delegate Adrian Boafo, the Assistant Majority Leader in the Maryland House of Delegates. I apologize. I've been traveling the country for what seems like 3 months. I finally lost my voice. It didn't happen 2 weeks ago. It happened this week. You know, states are the innovators of policy. The reality is there's so much partisanship happening at the federal level that we get this unique opportunity to kind of shape and craft policy the way we want to. I think the unfortunate part is that sometimes we can go too far in one direction, especially if folks, especially when we're talking about Fintech, don't fully understand or grasp the impact of the policy and the products that are being used. And so I think that as we head into this new phase on the federal level, in Maryland, a deep blue state with a supermajority of Democrats, we view it as our opportunity to kind of shape legislation in a real way. And I know in our committee, EWA will come back up again as it did last year. And we have this opportunity to really create a model for the nation that hasn't been done in any other state.
Good morning, everyone. Eric Ellman, and it's good to be with you. Thank you to Phil and AFC for the invitation. I spent almost 27 years representing the consumer reporting industry at the Consumer Data Industry Association, CDIA, trade associations representing consumer reporting agencies, including the 3 nationwide credit bureaus, Equifax, Experian, and TransUnion. For a big chunk of my time there, I led global government affairs and legal affairs, and did 2 tours of duty as the acting CEO. And after, not that I'm counting, but after 9,800 days, I left. I left just a couple of weeks ago, and I'm looking for my next professional challenge. And I'm happy to be here with you. I think one of the big challenges that states have is that legislators generally legislate. That are called legislators. That's what they do. But as the delegate had mentioned just a moment ago, they could sometimes go too far. So there has to be a relatively balanced approach to allowing innovation and not over-regulating. And I think one of those examples that I worked on, and props to my colleagues itself who mentioned this earlier today, is the power of rental payment history to improve and uplift under and unbanked consumers. And at CDIA, I led a rental reporting initiative to bring more rental payment data into the consumer reporting ecosystem. A law is not required to make that happen, but several states have pushed for statutes or rules to make that happen, and we had been willing and are still willing to meet them part way to try to legislate, but do so in a way that's generally free of mandates on landlords or property managers, but in a way that helps consumers. Like, for example, in California, they took their statute too far, put on so many mandates that I think it makes it almost impossible for landlords to actually comply, which actually means that rental payment data is probably flowing in very minimal quantities in California because of overregulation.
All right. So I'm Brandon Milhorn from the Conference of State Bank Supervisors. We've been around since 1902. We represent the 50 states, the District of Columbia, 3 of our territories. And where some of us see challenges, I see opportunities in the differences among the states. You know, we have a dual banking system in the United States, thousands of financial institutions, both bank and non-bank. We've got multiple regulators at the federal level, many regulators at the state level. I like those differences. I like the differences among the states. Does it make it challenging from a regulatory standpoint? Does it make it challenging from a licensing standpoint? Because we're working on that too with the nationwide multi-state licensing system. But those differences allow for new programs, new products, new technologies to mature in a system where a one-size-fits-all approach developed in Washington down the street, well, you earned wage access firms, you tell me how that's worked out for you. I mean, I would be a little anxious about a one-size-fits-all approach as tools and technologies and products develop. And so the benefit I see of the state system and the differences among the states is, you know, I've never been to a meeting of my state supervisors and heard from them, oh, you know, we want to, what they want is a dynamic, competitive, innovative, inclusive system, primarily because they care about their local economies. They're in it with their citizens. They're in it with their small businesses. They understand the importance of access to credit for, you know, not just their small businesses, but the homeowners in their state. And what they want to make sure is that it is safe and sound, and the products that they're accessing are responsible. And there are going to be disagreements about what that means and what that's like, particularly as products come into the market and mature, as technologies come in and change the way we think about banking. You know, our opportunity as states is to allow those differences to percolate, to allow those ideas to develop, and then start thinking about how we reach for consistency, how we set standards around licensing, how we set standards. You know, we've done a great job on things like money transmission with our model law, with our prudential standards for non-bank mortgage servicers. So the states can come together. We work together all the time. But on new issues, new emergent technologies, that's where these differences can actually support innovation in our system. That's why I think it's an opportunity for us, not necessarily a challenge.
So Brandon, you kind of covered my second question, but I still want to state it and give you a chance to add anything else. And then I have a fast follow question for Eric and Ryan. But, you know, we have states are independent actors. We have 51 jurisdictions. There's different approaches, and you did a great job of highlighting, you know, the benefit of having so many different states kind of innovating and you know, setting their viewpoint through policy and regulation. But the CSBS has done a lot of work to streamline and coordinate state efforts, particularly through Vision 2020. What do you view as like well, kind of two different questions, the appropriate level of coordination between states when it comes to financial services, and what do you think is actually possible in terms of the coordination between states when it comes to more uniform, you know, financial services regulation?
Well, there's a lot that can be done at the state level. There's a lot that's already been done at the state level. I think about, again, the money transition model law that we put in place a few years. I think we've got 22 states have fully adopted, 4 states partially adopted, but because of the standards and the way our supervision system is coordinated. 99% of customer funds are covered by that money transmission model law. That's a tremendous opportunity for states to work together on licensing through our nationwide multi-state licensing system, but also from a supervisory standpoint. So instead of having to go through 50 state exams, you can go through one exam on our state examination system and meet the requirements and standards applicable across the United States. That's a great opportunity for us, not only to set standards and licensing requirements for our institutions, but also to reduce the cost of compliance from a licensing and a supervisory perspective on our supervised entities. And even in areas like buy now, pay later, earned wage access, where CSBS hasn't taken a position as an organization, there are many states that are utilizing the nationwide multi-state licensing system to license products, to license earned wage access products, and that's a great opportunity for us to learn. We're engaged not just with our state supervisors. We work closely with industry. We engage with our federal counterparts. That, to me, is the benefit of that coordinated, different but coordinated system. Our goal is not standardization as much as it's consistency and coordination.
Do you want to respond to
I
that?
was going to say, I'd like to go on the record to say we would love a federal standard instead of a 50-state patchwork, but no, I think the experience as a new kind of entrant into the public policy ecosystems of these different states has been really interesting. So I come from working in New York State as a legislative counsel in 2 different state agencies, which were under the New York's last governor, so aggressively political, like always looking for a headline, always looking to kind of, bring an enforcement action against an industry or a company that was almost like risk-free or consequence-free. I mean, there was no kind of political headaches that were going to come from it. So at at DailyPay, as the EWA industry, we have been that, right? We're so new, there are maybe I would say 7 total public policy people, even though we are a multi-million user industry. So we are just getting started. So we get beat up around a lot in every single state. I think there is this, I did a panel in Texas and a legislator said, if you give a regulator an inch, even in Texas, they're going to take a mile. And to be honest, that has been the case. Blue state, red state, it does not matter. There are existing laws, and regulators, with a couple of exceptions, will say you need to fit in this one, right? They do not see it as, we're going to find a creative solution because you're a little bit different, right? And we're also going to take into consideration the policy, benefits of this product, right? The fact that there is nothing that's free or $3 to access liquidity quickly. They have their own kind of, they have their own kind of mission, and it is not to solve our problems. It is not to find a way to create a license for us. So that has to be a legislative solution, but we have to work together with the regulator. I think with only one very small exception in the state of Connecticut, that has happened, where regulators do want to be creative with us, to be how do we create a standard, and how do we codify industry best practices? How do we make sure that maybe you're taking, you have to adhere to provision A, B, and C from the lending law, but we'll write new portions of it so that you guys fit. But no, I think it is a fight, and I think it's a fight because these are entities these are government organizations that have their own sort of mission, and the fact that most of our companies were really founder-led until very recently. So they were why isn't everyone throwing you a parade when you tell them what you do at Earned Wage Access? It's it is a free access to wages you've already earned. What is there not to love about that, right? And we'd have to tell them, no, they think we're payday loans. They think we're stealing money from poor people. It is a battle in nearly every state. So I think the regulators have been either brought to the table by legislators to say, we got to find a solution. And the other thing too is there's this old adage, if you can't make a friend when you need a friend. Oh my God, is that correct? So we're extremely active now, especially when it comes to finding champions to talk to regulators with us to say, don't just look at us as another loan that just isn't licensed, right? This is a new product. We have to work together to create industry best practices. And it's easy for me to say we'll agree to everything under the sun, except for like one or two things, just don't make us a traditional loan, because we're DailyPay is the largest in the industry. And so we can afford 1,900,000 different compliance, fingerprints and all the other things that the smaller startups can't afford. So no, it's definitely, I'm getting animated because like we are the most active legislatively in the whole country. We go to so many different state capitals. You don't see anybody actually trying to pass legislation, stopping legislation everywhere, right? Privacy, AI, whatever. But like trying to actually pass a law, it's like we are like where the rideshare industry was a couple of years ago or a decade ago when they had to change insurance laws. And for the most part, it's true, regulators do eventually want to come to the table and work together. I think like Maryland has been like uniquely positive, and like the collaboration's been uniquely positive, and like, there's someone from Maryland who's here that like I was in like her exact role at the Department of Labor like 5 years ago, so I understand the pressures, and it's a little bit fun, right? We'll see how it goes in Maryland. But yeah, I definitely think if there was a national standard, this would be a lot easier, right? This wouldn't be like a 50-state, 35-state, 41-state conversation, 41-state job, which really it has been. And so like Phil jokes that like I don't stop talking, and it's partly because like we have so many conversations that have to happen, right? We have to meet and explain what we are to so many different states before they just read a terrible article that says, oh, you guys are a payday loan, so you should just not exist. And to explain that like, no, when we don't exist, like in the state of Connecticut, 87% of our users pay more in bank fees or late fees or anything than before when they had access to like $0 EWA. So, we are really a benefit to people, and so like just getting there together with a regulator is difficult, and it takes a lot of work and a lot of collaboration. It's been very positive though.
So no, that was a great. Right.
We've been successful in working together, is what I would say.
No, that is true. So I guess I'm just wondering. So you support the CFPB's earned wage access rule?
I would say we would support a CFPB's earned wage access
So
rule.
I
Maybe
mean,
not this one.
so to me, and not to step on our other panelists who
Yeah.
seem to be literally stuck in the middle.
Yeah, sorry.
I mean, what I think is, as you describe, I understand those challenges. I understand those challenges. But I think what you're feeling there is disagreements about the product, disagreements and misunderstandings about the technology. And that, what you're describing to me is a maturity process. States have taken different approaches. Connecticut's taken one approach. There are several states that have taken other approach with respect to earned wage access products. But that has allowed the product to exist and to continue to mature. And at some point, those will skate together. And is that hard? That's hard. I understand from a regulatory standpoint the challenges that creates for companies. You want certainty, right? You just want one standard that you can hit to. I want to build to that mark, and that makes everything. I would love for that to happen too. But democracy and the dual banking system doesn't always work that way. It can be a little bit messy as a consensus develops. And I think I think a lot of times when I hear complaints about the state system, that's the fight that we're having, is as that consensus develops around a tool, there are going to be disagreements, and that makes for real challenges. I don't dispute that.
Let her talk,
So,
sorry.
sorry, Eric, did you want to add?
Yeah, I think that in my long tenure at CDIA, we had an extraordinary track record of defeating legislation that wasn't wisely thought out. But we also have a strong track record of working with legislators and regulators to try to get the process right. And maybe the walk-up song for this panel could have also been "Know When to Hold 'Em and Know When to Fold 'Em." And for example, also picking on Maryland, it's also my home state. A number of years ago, this was before you were there, Mr. Leader, but there was legislation that was introduced that was bipartisan and bicameral, which doesn't happen very often in Maryland. It was sponsored by the Senate President, sponsored by the House Majority Leader, and co-sponsored by almost 2/3 of both bodies. So we knew when the bill was dropped that this is a bill that we were not going to be able to defeat. It was the first of its kind legislation in the country that ultimately passed to create a credit freeze for minors. We all are familiar with credit freezes for adults, but one of the proposals in the bill was for the credit, almost every minor in the US does not have a credit report, but the bill would have required the credit bureaus create a credit file for every minor in the state for the sole purpose of freezing them. And we explained to them, recognizing that the bill was going to pass and we had to find a way to work together to convey to them that if you create, I don't remember what the census data is in Maryland, but let's say there's 1 million kids. So if you create 1 million credit reports for the sole purpose of freezing them, you are now creating 1 million new opportunities for credit fraud. And ultimately, the Attorney General's office, the Commissioner of Financial Regulation saw the wisdom in that, and we came up with a system almost basically on the back of a cocktail napkin that essentially set a national standard. So Maryland passed it, and every other state in the country passed it, and then ultimately it became hard-coded into federal law. We all like national standards, as we mentioned. This is one that created a national standard from the states up rather from the feds down. But we worked very hard with Maryland to get it right in Maryland because we knew that once Maryland passed it, every other state was probably going to do that as well. Everybody loves protecting kids, so we needed to get it right the first time, and we set a very strong pattern and was able to follow through in 49 other states. So there's a way to work cooperatively, and there are times when sometimes that just does not work.
You usually get to the same place when the conversation ends in all these different states. Like the 5 laws that have been passed are substantially similar. Like almost all of the treatment is substantially similar. And the other like beautiful thing is I like to say is like, EWA is like democracy in action. Like no one is being run over. No bill is ever being passed through in any state. Doesn't matter how large the supermajorities are. Like everyone always gets a say, which is like, I think partly because it's a new financial product and new financial regulation for that product.
So Adrian,
Sorry.
I have a question for you. No, I love it. You guys are answering all my questions without me asking them. So it's like, this is the easiest job ever.
We have the list.
Yes, yeah. There was a list. Anyway. Adrian, so state legislators are generalists. I think we have all seen examples of state laws where we like the consumer protection pursuits, but maybe the execution or the wording could have been different. Is there anything we can do better as an industry to help legislators, again, who are generalists, better understand nuances of financial products or services and how they fit into like a broader national scheme?
Yeah, well, let me just say for a moment there, I thought I was going to have to get off the stage and have you guys going to go at it. Well, let's talk about how we got here in the first place, and I'll take you into a mind of a legislator. When we heard the EWA bill for the first time in Annapolis, it's a 90-day session, right? Everyone has their bills, everyone has their priorities, and on top of that, you're focused on the stuff that's going on in your committee. And if it wasn't for DailyPay coming to us, frankly, a lot of us wouldn't have known that the bill was coming, and we wouldn't have killed the bill, which we did in the House successfully. It's going to come back next year. There's going to be a lot of conversations about that and how that works out. We're working with our governor to have really holistic conversations. In fact, we just brought him down to Afrotech to meet with some other EWA product and businesses, and I think he has a new, unique understanding about how these products work. But let's talk about how we got here and the rush to over-legislate, in my opinion. What happened is, we all expected, and I'll be clear, I would love a federal standard too, right? On some of the biggest issues, I think the federal government should step in and it shouldn't be the states. I totally agree with that. This is one of those areas that should have happened. But the reality is, what we never did on privacy is we never passed an actual bill until last year. So for many years, we were waiting on the federal government to do something, and nothing ever happened. And so you end up having a bunch of legislators who are anxious to do something in the tech space.
And that was a doozy.
It was. It was really hard, actually, because it took about 5 sessions for us to get that bill passed out of the House and the Senate. Well, I won't talk about the Senate here. But what I will say is that there is this over-rush to legislate. And then there's also this rush to look at other states and say, well, they have a bill. They must have done it right. And frankly, that's just lazy legislating. I'm guilty of it sometimes too, right? I'll look at a state idea and say, oh, maybe they've done that completely right and thought through it, and that's just not the reality of where we are. And so I think when it comes to these products, these folks just mentioned it, but there's a fundamental misunderstanding of the product. One, there has to be a recognition that how did we get here? How did we get to a place where every single one of our constituents actually needs to use this product? That's a conversation for a different panel, at a different conference, at a different time, and a different day. But the reality is that in my district, I represent the most affluent African-American county in the country. More millionaires, more black millionaires anywhere else in the world, but in Prince George's County. And once we had that EWA hearing, you've heard this story before, the first thing I did was not go to my next meeting, is I hopped into my car. And I went to my district, which is about 10 miles from Naples. And I went to talk to people. I said, hey, have you heard of DailyPay? Have you heard of solo funds? Have you heard of these EWA products? And every single one of them said yes. And let me tell you, if you're going to take them away from me, can you imagine what that's going to do for my life? That's going to do when it comes to affording rent, or getting groceries, or that remodeling that I'm going to do to my bathroom that I've been expecting to do for a long time. And that's significant. But if legislators don't understand that, and we think that emerging technology is like the issues of the past, then we have a problem. And so we have to do a lot more educating around what these products actually do, who actually is using them. And again, most affluent African-American county in the country, and a majority of my constituents are using them. There's a problem there that we have to solve. Again, that's not for this room to really be a part of that discussion. But the reality is that, yes, we should be cautious and recognize the problems that happen with payday lending and how people of color in those communities were affected. Absolutely. We can walk and chew gum at the same time. We should look at that industry and say, well, they are not that industry, and we shouldn't regulate them in the same way. The same conversation is happening in the federal level with crypto, right? That, oh, it must be like every financial institution that exists. The reality is that that is just lazy legislating. And if we do that, what we'll end up doing is end up harming our constituents in the long term and allowing products that actually help folks to go away.
Great.
More choices, more competition gives more inclusion.
Exactly.
Right? I mean, that's how I think about it. And technology has a tremendous opportunity there. That educational component of your message is so vital. And not just for legislatures, but for regulators as well. Because that opportunity cost, when you're making regulatory decisions, you've got to consider the opportunity cost and the impact that has on the consumers. That's part of the process, that education.
I thought that was a great way to wrap up this panel. Obviously, more to come on the state's level in the next few years, but if you'll join me in thanking the panelists for their time.